Hi everyone, today let's talk about my trading plan for the upcoming week. Of course, we got to talk about the big rate hike that happened this week, 0.75, which was 0.25 higher than everyone thought it was going to be, which is the highest since 1994. Then of course, we'll go over all the major markets starting with the S&P 500, the Nasdaq, Russell 2000, then we'll hit the VIX and XOP. And I want to go over CrowdStrike as well as Domino's Pizza. Then of course, we'll go over some trade ideas as well as my current positions going into the start of next week. So if you like trading stocks and options and making money, definitely like and subscribe. I make videos like this as well as whole portfolio overviews every single week, so make sure you hit the bell so you don't miss out on any future content. Welcome to the Portfolio Bulletin. Let's get started. So if you've been watching the news, you would know that the Fed raised rates by 0.75, which was a little higher than was initially expected, but it came out early in the week that a 0.75 hike was possible, and sure enough, that's what happened on Wednesday. They say here this is the largest attack against inflation that they've launched so far, raising the base rate to 1.5 to 1.75, which is obviously the highest it's been in quite a while. They say it's clear that they are taking inflation very seriously, and that's why they're starting to raise rates at such a fast pace. He said they will continue to make decisions on a meeting-to-meeting basis, whether they will use 50 basis points or 75 basis points hikes, but it's going to be based on the data. You can see what the Fed rate looks like. Currently, we started that hiking cycle into COVID, dropped it down to 0, and so far we've come back up to around 1.5 to 1.75. Again, still historically low compared to where we've been in the past, and we should expect that this is going to continue higher. Jay Powell said inflation can't go down until it at least flattens, and so far it's been continuing up, so they need to see some progress before they can even consider slowing down the pace at which they raise rates. And at the current rate, they expect the Fed rate to be at 3.4% for the midpoint by year end. So currently we're at 1.5%, which means that rates are going to go up by around another 2% and could end even higher in 2023. They also say the Fed is now expecting a GDP growth of 1.7%, down from 2.8% estimated in March. They said they see personal consumption expenditures rose by 5.2%. This year from 4.3%, and core inflation is also up 4.3%, up just 0.2% from the previous projection. So core CPI and expenditures continue to go up, and this is why the Fed is continuing to be aggressive on inflation. Jay Powell mentioned that the current economy is still pretty good, and job gains have been pretty robust. Basically, this allows him to continue to raise rates with a lessened risk of affecting the overall economy and people's real lives versus just the financial economy. And of course, they closed out saying that 2% inflation is their overall goal, and they expect to be strong on inflation until they get closer to that 2% mark. And then they show a short history of what it's been like. So we had rate hikes from the 2016s and 17s into the 18s. Then we started coming down in 19 and 20 with COVID. And then we're kicking back up here going into 2022. Moving over here to the S&P 500, and let's see exactly what that rate hike meant for the stocks. You can see on Monday we had that announcement where they were considering a 0.75 hike, and the market fell off a cliff. So we were kind of on this general trajectory. Extend this out here a little bit. And basically this accelerated the retesting of this support level, gapped down below the previous lows, had a slight move up into the actual Fed announcement, which was basically a retest of this longer-term support and resistance line. Of course, that failed. We gapped back down again below the lows and retested some support. Currently, the support is still holding, but this is still a very clear downtrend, and this looks even weaker than it did before, continuing to make lower lows. And we still don't have a firm bottom, so I do expect there's potential for a lower low here, even if we are currently at support. Moving over here to the Nasdaq, you can see it's not quite the same picture. So we had that big move down, again gapped through the previous lows, retested those lows instead of previous resistance. Actually was a higher point than the open on the 13th. And since then, we actually went sideways instead of that sliding downward movement that we saw in the S&P 500. So the Nasdaq is a little bit stronger currently on a technical picture than the S&P 500. And that's probably because the Nasdaq fell further than the S&P has so far. And because it's fallen so much further, it is a little bit underpriced compared to the S&Ps. Moving over here to the Russell 2000, similar move down, but not as weak. So we didn't take out those previous lows with the gap. We actually gapped through kind of through the center of the trading range, retested that center, which was right around the lows, and then we gapped down through the lows after that. So A little bit different, but more similar to the S&Ps than the Qs, where we are at those lower lows and we're continuing to make them. We had a slight recovery into the middle of the week. You could argue that this might be a slight upward movement, but overall this still is pretty weak, coming all the way down from that $240 level to $165. Also, smaller businesses, like the ones in the Russell 2000, are going to struggle more with higher rates. And if there is an economic recession, which there is potential for, then the Russell is going to suffer more than the other companies, especially the bigger companies at the top of the S&P 500. Moving over here to the VIX, on the daily chart, you can see we had that channel, which I thought we would get a rejection here and a retest of this lower support level. And then I expected the move higher, which would be lower for the overall markets. But instead, we got a gap up through that level, basically on the Fed news, and volatility went significantly higher. And then we hit this kind of 34.5 level, which seems to be some longer term resistance. You can see we touched it here in December of 2018. And then this was a notable point here in February of 2000, June of 2000, resistance again here in February of 21. And then we touched it here in December of 21, January of 22, March of 22, and then it was resistance again here in May, and possibly one more time being resistance here where we touched it on 16 June, and then we got a slight move down. So if this is a nice little resistance point, and the VIX does go lower, potentially retesting at least this support level here at 27.5. That should spell some upside potential for the S&Ps and for the market as a whole. Moving over here to oil and gas. So exactly what I thought was going to happen did happen. So here on the daily chart, we broke past this previous high. If we didn't reject off of that previous high, which we ended up gapping through, that the next resistance line was going to be basically up here at around 172. Didn't quite make it up there, got up to 170, definitely in the vicinity of resistance. And then after that, we fell all the way through the floor. So all the way to that previous level of support. Probably argue that this should be closer to right there. Interacting here in October, August, December, again in January, February, and then here one more time again in June. This could certainly be a point of support for oil and gas stocks, but the viciousness of this down move is certainly questionable. And we are back into those previous lows here. So if we do get a break of these lows, there's significant risk that this could go much lower, much faster. So I'm definitely going to wait to see before I take any positions here on oil and gas, even though there is potential for support, possibly in this buy zone, somewhere around 112 to around 118. So definitely a couple points lower of downside potential, but it's definitely something to watch going forward. Moving over to one of my favorite stocks, this is CrowdStrike. You can see we had the big sell-off along with everything else, and a pretty small move down here actually versus the market with that Fed announcement going from 179 to 150. But in terms of the volatility that this stock normally sees, going from around 240 all the way down to 130, this little move on the announcement was less than I expected, and since then we've kind of rallied back up, mirroring this resistance line, and it seems like there's some potential for upside in the upcoming week. So I will definitely be paying attention to CrowdStrike, looking for a position here early in the week, try to maximize those credits. And if we get a nice little move down and a retest of maybe 158, that would be awesome. That would put my break even probably closer to around 150, which is a pretty strong support line here in my opinion. If you also look here, there's a gap at 162 or so, and some potential jumps through here in recent price history. So if we do get a retest of that vicinity, that would be a better entry than where we are right now at 164. Lastly, here on my watch list, we have Domino's Pizza, not a stock that I've talked about on my trading plans here in a while, but you can see here on the daily chart, it basically went sideways all week. Fed announcements, all that price action, didn't matter at all. Looking at the 4-hour chart here, you can see still, I guess you could call this a slight down move into the beginning of the week. It went from 385 to 373. On a percentage basis, very small move compared to the other stocks. And it seems like this is breaking out to the upside. We got some crosses on the moving averages, a really solid bottom down here at around 330, maybe a little lower at 325. But compared to some of these other stocks, this looks really strong, and I'm definitely going to be paying attention to it going into the next week. Moving over here to possible trades, looking at CrowdStrike first. Always be conscious of the fact that CrowdStrike does not have a lot of option volume, so the spreads do get kind of wide. But if you can get a good entry, it's definitely worth paying attention to. On the volume, there's some good support down here at 150, which obviously would be a great entry for the stock based on the charts. And then there's still good volume here at 162 and 160. And on the call side, huge volume here on the calls at the 165s. Can't tell whether this is buying or selling, but you can also see here that the calls are actually selling at a little bit of a premium compared to the puts, meaning that people are driving up the price of these calls and are expecting an up move from current prices. You can see there's big volume even out here up to the 180s. Again, saying to me that CrowdStrike is expected to move up higher going into the next week. Next up, looking at Domino's Pizza or DPZ. Again, not very much option volume, so pretty wide spreads here. Might be worth actually just buying the stock and trading it outright. But you can see here, comparatively, there's still good volume down here at 355 and 360 compared to at the money, currently very small option volume. And you can see that comparison here, pretty low call volume with only 28 compared to the 40 and 45 down here at 355 and 360. Moving over here and looking at the NASDAQ, my primary stock that I trade, I do expect a little bit of a down move into the open. Looking at the chart, you can see we're right in the center point, and we might need some buying volume, potentially moving down to that 271, 272 range, which would be a pretty good option buying, which would be a pretty good option selling opportunity in my opinion. Going back over to the charts here, you can see bigger volume around that 270 level at nearly 30,000 options, which is actually the biggest volume that I see across the markets here. 20,000 on the call side at 275, and then 10,000 out here at 278. So seems like 270 is going to be a pretty strong level, in my opinion. And if that level holds and we can make some money going into the next week, that would be pretty great. Otherwise, looking at my progress, down a few $1,000s here, but made a little bit of it back into the Wednesday and Friday expirations on the NASDAQ. So big loss on Monday. I was more bullish than I should have been going into Monday. And then we had that announcement, which caused me to lose several $1,000s, but made a little bit back on Wednesday and Friday. You can see I did sell 2 options going into the weekend, significantly less long going into this week than I was last weekend, but I still expect that these are going to hold. You can see they're all the way down here at 270 and 272. Got pretty good entries on these, and we'll have to make some decisions on Monday after we see what the market is doing. Otherwise, still not trading my IRA right now, and I don't have any positions in there. But otherwise, that's my trading plan going into the next week. Let me know down in the comment section what you think the market's going to do, or if there's any individual stocks that I need to cover in these videos. Definitely like and subscribe if you got any value, and hit the bell so you don't miss any future episodes. I'd really like to see some positive trades that are coming out of these videos, or any trade ideas that you think are worth looking at. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.